Hi everyone, Mathis Connor here with Connor Management Group, and today is June 20th, actually a day late from the presentation, 2014. And this week we're going to look at the best healthcare stock to buy right now. As you'll see on this opening slide, the company we're going to talk about is in the medical instruments and supplies industry, and we see the 12-month upside potential at 22.6%. On to the next slide, we see that the name of this company is called C.R. Bard Incorporated. The ticker symbol is BCR. Once again, they're in the medical instruments and supplies industry, and we see the 12-month upside potential at 22.6%. On to the quick facts slide, we have C.R. Bard Incorporated is engaged in the design, manufacture, packaging, distribution, and sale of medical, surgical, diagnostic, and patient care. The company has four segments: vascular, which was 27% of sales; urology, which was 25.5% of sales; oncology, which was 28% of sales; and surgical specialties, which was 16.5% of sales. The international sales were 34% of total sales in 2013. Their website is www.crbard.com. The company is headquartered in Murray Hill, New Jersey. They were founded in 1907. The number of employees they have stand at 13,000. Ticker symbol is BCR. They operate in the healthcare sector, and the industry is medical instruments and supplies. On to their top numbers. The annual revenues over the last 12 months was $3.8 billion. Their net income for the last 12 months was $734 million, and their cash from operations for the last 12 months was $1.01 billion. And their market capitalization stands at $10.6 billion. So they are a sizable company. On to the products and services slide. I have to admit, they must make some very very special medical equipment, because I could not find too many photos or descriptions, at least descriptions I would understand, of their products. But some of the high-level products that I did understand is that they make balloon catheters, which appear to unclog arteries. I guess this is part of their vascular unit. They also manufacture hemostats, which seems to be a chemical that are used during surgical procedures to help clot the blood. So I guess people bleed slower or stop bleeding during surgical procedures. And we also don't have a photo, but they also make catheters that are related to I guess their urology segment, which I guess helps people basically pass urine. I mean, there's an accident that seems to be a sizable piece of their business. Also on this products and services slide, they show a bar chart for 2013 and expected in 2020 of where they see their growth. And they basically divided up the segment, the analysis into three segments. One was vascular, which I guess is part of the balloon catheters. The other one was hemostats, which is part of the hemostat product I just described. The next one, which is larger, is what they call home care, which appears to be mostly these catheters for passing urine. So those appear to be their leading product segments. Once again, I didn't find too many photos of their products or too many layman terms to readily understand what they do. But this does appear to be a very strong company and a solid investment opportunity, as we'll get into. Going on to the metrics slide. Once again, the annual revenue over the last 12 months was $3.8 billion. The net income was $734 million. And the cash from operations stood at $1.01 billion over the last 12 months. The operating margins for the company in 2012 were 32.3%. And 2013, the operating margins were 27.2%. And, we're in a partial year right now, but the operating margins appear to be coming back into the low 30s. So I would just consider the operating margins essentially flat. I mean, part of the pullback in margins is quite possible related to the Affordable Care Act, but they have clearly rebounded for at least the early part of June 2014. On to the evaluation metrics. The trailing PE ratio for BARD is 22.2. The forward PE ratio for BARD is 16.6. That's the kind of trend we want to see. That implies that earnings are expected to increase. The PEG ratio is at 1.3. That's still around 1, so it's worth considering. The price to sales ratio is at 3.4, reasonable. The price to book is at 5.1. Also considering it's a somewhat of a technology company, that also appears reasonable to me. And the enterprise value to EBITDA ratio stands at 13.4. The recent closing price for BARD was $138.60. The 52-week low for the stock was at $106.72, and the 52-week high for the stock was $150.13. So it's closer to its high than its low. The 20-day moving average stands at $144.33. The 50-day moving average stands at $142.46, and the 200-day moving average stands at $135.50. And that's the relationship you'd like to see. You'd like to see your most recent moving average higher than the later moving averages. That implies an overall uptrend. The average daily trading volume for BARD stands at 869,000 shares per day, so it's well traded. The beta for the stock is at 1.1, so the stock tends to move with the market, up and down, at least historically. The dividend yield is only 0.6%, so this is not a strong dividend paying stock. Although the dividend payout ratio over the last 3 years has averaged 12.3%. I mean, that doesn't imply it's a strong dividend paying stock either, but it does pay a dividend. Onto the price chart for BARD, ticker symbol BCR. What we see here is that over the last year, the company has, somewhat steadily, a couple of fits and starts of moving up in price, but it never really pulled back too much during its ups and downs. But over the last year, the stock has appreciated 25.7%. So, the company is performing, and it's had a respectable run-up over the past 12 months. We don't have any major movements or special events that are worth reporting on the stock chart. And on to the next slide. Overall, the financial statement quality of BARD is excellent. They have a very strong balance sheet. Their debt, they only have $758 million in debt due over the next 5 years. And, as mentioned, their revenue is around $3 billion, but their profits each year is around $500 million. So you can see how they could pay off their debt in 2 years with their profits. So they don't have, they're not under any financial stress whatsoever. And the operating margin trend, as we mentioned, it dipped a little bit in 2013, but it started recovering in 2014. So we're considering that flat right now. The price pattern trend, the stocks appreciated 25% over the last year, and we expect the price to appreciate some more. So we have the price pattern trend is classified as increasing. Our overall market outlook right now is neutral. We're seeing stocks we're not seeing that many stocks that are overvalued or that versus a number that are undervalued. So we feel that the market is kind of about fairly priced right now, and you just have to find unique investment opportunities within. There's no clear trend to say about a particular industry going one way or the other. So the recent closing price for BARD, as mentioned, is $138.60. Our 12-month price target is $169.96. So we see the 12-month upside potential BARD at 22.6%. BARD is a solid company. Yes, we're aware that it's in the healthcare space and a lot of changes going on with the Affordable Care Act. And in some of the analyses we read, for instance, the number of the medical supply companies are now subject to a 2.7% excise tax on their products. So that's what we think happened with the margins in 2013. But the reports are also saying that despite this tax, which have hurt the margins and slightly, the increase in volume as a result of the Affordable Care Act is effectively offsetting those additional charges. So the Affordable Care Act doesn't seem to be anything that's on a net effect, at least hurting BARD Incorporated at all. So that is our analysis, and we do believe that BARD Incorporated is the best healthcare stock to buy right now. And on to our last slide. It's just an overview to let you know that Connor Management Group, our investment management business, is open and we're accepting clients. So if you're looking to increase your savings, improve your lifestyle, accelerate your retirement just a bit, then I think we believe our investment management business is a good solution for you. We can manage your IRA accounts as well as old stranded 401k accounts. We use our proprietary algorithms to monitor our client funds and concentrated investment portfolios, where these portfolios have anywhere from 10 to 20 different stocks in them, and while the average mutual fund has about 150 stocks in them, which is one of the reasons why we believe it's so hard for them to beat the market on average. And additionally, something that we find that our clients appreciate is that we use what's called a separately managed account arrangement. And you basically open up an account on your own with a custodian, like you were going to, Schwab, E-Trade, or whoever, and you simply give our firm management authority over your account. And so, we can't access your funds; it's your account, and you just give us management authority. We offer 4 different strategies that are all supported by proprietary algorithms, completely dependent on your risk appetite. Our most conservative one is a dividend equity income type strategy, where we're just investing in high quality stocks that pay dividends and also have the potential to appreciate. We have a value portfolio strategy where we look for deep value stocks independent of whether they pay a dividend or not. Our next one is a long short portfolio strategy where we will take long or short positions. And our last strategy is our most aggressive one, is what we call our option portfolio strategy, where we also use our algorithms and we simply take call or put option positions on stocks we think that will move in the near term. So, we're taking advantage of the latest technology available through the separately managed accounts arrangement, as well as the proprietary algorithms that we developed. So if this sounds of interest to you and you have $25,000 or more to invest, call us about becoming a client with Connor Management Group, and you can reach us at 281-947-2201. That's 281-947-2201. And you can also find additional information about us at our main website, which is www.conner, CONNERMG, managementgroup.com. That's connermg.com. So that's all we have for this week, and we hope you found this presentation helpful. Take care. Talk to you soon.